I'm Alexa and this is Real Estate News with PropertyLimBrothers. Now, the two main areas that Budget 2022 will immediately affect the property market is actually through the increased tax rates for residential properties as well as the incremental GST hike. Now, towards the end of this video, we'll also be talking a bit about the electrical vehicle charging points in residential area because this could possibly change housing trends in the future as well. So firstly, let's talk about the increased tax rates for residential properties.
In particular, I will make several adjustments to property tax, which is currently our principal means of taxing wealth. I will increase the property tax rates for non-owner occupied residential properties, which includes investment properties. For such properties, I will increase the property tax rates from 10 to 20% currently, the current range, to 12 to 36%. All non-owner occupied residential properties will face higher property taxes, and the increase will be more significant for properties at the higher end.
So firstly, some good news for owner-occupied residential properties. If you're an owner-occupied home with an annual value of $30,000 or less, such as HDB flats or condominiums and landed properties in suburban areas, you will actually not be affected by the increase in property tax rates. However, the property tax rates for the portion of annual value in excess of $30,000 will be revised. So currently, the tax rate is between 4 to 16%, but with effect from 2023, the tax rate will now increase from 6% to 32%. So looking at this table, you can see for a large landed property with an annual value of $70,000, the tax rate will actually increase from $2,780 to $3,930 next year. And this will further increase to $5,080 in the year 2024. Now, when it comes to very large landed properties with an annual value of $150,000, the tax payable currently is at $12,580. Now, by next year, this tax will increase to $20,230, and by 2024, it will increase to $27,980. Now, on to the not so good news. Now, for non-owner occupied residential properties, you will face a higher tax rate starting from 2023. Now, all non-owner occupied residential properties, such as investment properties, will face higher taxes of 12% to 36%, up from 10 to 20% currently, with the increase more significant for properties at the high end. Now, with the increase in property tax, some of you may be wondering, so what's going to happen to the property market now? Now, honestly, there's no confirmation on how the market will immediately react. Now, I guess time can only be the judge of whether this increment will deter residential property investors looking to capitalize on the rental market or to further fuel the rental market by transferring the extra cost to potential tenants. Next, let's move on to the incremental GST hike in 2023 and 2024.
I have therefore decided to delay the GST increase to 2023 and to stagger the increase over two steps. The first increase will take place on 1st January 2023 from 7 to 8%, and the second increase on 1st January 2024 from 8 to 9%. I want to assure all Singaporeans that we will continue to implement the GST in our unique Singaporean way, with features and schemes that support the less well-off.
Now, I'm sure this is one of the news that most of us are unhappy about. So how does GST affect the current property market? Now, just to share, while the sale and lease of residential properties are exempted from GST, the sale and lease of non-residential properties are subjected to GST if ownership of the property is by a GST-registered entity. Now, for properties that consist of both residential and non-residential portions, the non-residential portion is liable for GST, so do take note of that. So while this increase in GST may not be drastically portrayed in the commercial market because a good portion of commercial transactions are between entities, GST-registered entities will be able to claim back the GST paid on the transactions as long as they fulfill the criteria set out by IRAS. Now, another thing to note is that GST is now also chargeable on movable furniture and fittings. So buyers and renters do take note because this could possibly translate to increased costs on furnished properties due to the increased GST charges. And when it comes to commissions paid out to property agents, they are also subjected to GST as long as the service rendered is in relation to a property located in Singapore and the estate agent is a GST-registered entity. So with these thoughts in mind, some of you may be looking to sell and purchase your properties before the hikes in order to reduce costs on transacting. Now, although the 2% increase may not seem like a large jump to some of you, the cost of selling and purchasing will proportionally increase based on the quantum of the transaction, so do take note of that. And now we're going to touch on something a little different, which is the electrical vehicle charging points.
For those who wish to drive, we want their vehicles to be cleaner. Hence, we had announced our intention to phase out internal combustion engine vehicles by 2040. For passenger vehicles, the most promising clean energy option is electric vehicles or EVs. We have provided significant incentives for EV adoption. In fact, within a year, the EV share of new car registrations has jumped from just 0.2% in 2020 to around 4% last year. Given this momentum, we will further accelerate EV adoption by building more charging points closer to where we live. To do this, infrastructure upgrades will be necessary, and the financing can come from green bonds.
Hence, it is inevitable that charging points will then become a selling point of houses or become an indispensable feature of homes in the near future. So for those of you looking at a landed home, it might be good to consider buying homes that already have a charging point or to install one when you buy over it so as to appeal to a more future-forward buyer pool. So now we have come to the end of the news with PropertyLimBrothers and some closing thoughts. So firstly, with the increased cost of living due to increased taxes, I do think it will be prudent to consider what you're paying for when you're looking for your next property. If your plan is indeed to relocate your family to a bigger home with a bigger price quantum, do take note of the impending increase in property taxes as well as the potential cost of GST through real estate agency fees. Now, if you are looking to restructure your current property portfolio in alignment with the new changes to the revised residential property tax rates, feel free to contact PropertyLimBrothers for a non-obligatory consultation. Now, for the latest property insights, do head on to our PropertyLimBrothers website. The link is in the description below. I'm Alexa, and we'll see you next time. Bye!